Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Back in the room.
Back in the room. We got the
jingles and the music and everything. That felt so sparse last week.
I know. Well, for me, it was all there, but you couldn't hear it. Oh well. There we go. Hello, everybody, and welcome to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. And this week, we got the final episode of the John Muir interviews, where he looks back at his career in the London market. But first off, the news, Ben. So let's start off with the FT reporting on the Blueprint 2 frustrations. I think you saw this one.
Yeah, I bet everybody else saw it as well, given it was in the FT. And Ian Smith, who is moving on, perhaps his swan song article is quite a critique of London Lloyd's IT issues. I think this is quite damaging. It's been repeated across various other articles in the market. It's a shame that Lloyd's wasn't able to comment. I didn't feel they could comment on this. I suspect that's caused a bit of an issue. There's nothing new here, I don't think. I think it's stuff we already knew. I think it is repeating this, but it is also drawing attention to the upcoming changes in terms of Roxburgh coming in, Peter Roxburgh coming in as the new chairman. And I think a sense that he has got to grasp this nettle somehow. And what does that mean? Well, I don't really know, because you and I kind of know some of the inside stuff and machinations of this whole exercise. So it's a kind of not sure you can grasp. I'm not sure it's a nettle you can even grasp. A bush of nettles, brambles maybe. I don't know. You could go along. You could take the illusion further and further, but it's tough one.
Yep, it is, and I think it's unfortunate the timing of it. I think because I think next week and in the following weeks they have planned to communicate what the next kind of steps are with the changes with Bob James taking over at Velenetic and all the other changes that then need to happen. They probably hadn't got the ducks in the row in time for this, hence they.
I just don't understand though how they could not respond to this and say anything, given that they must have. They may not have finished their presentations for next week and the week after, but surely they could have said something. I think it's a good opportunity to have said something, which is get on the front foot, but. Well, it's a shame. I mean, just not saying anything and letting the article run like this is not good.
Yeah, I agree with you.
Market, right? It's bad for the market, I think.
It is an opportunity, isn't it, to say this is what we're going to do. This is the plan going forward. Watch this space. We haven't got it.
Things go wrong. We know that. Everybody knows that. Quite often go wrong at Lloyd's, but in technology. Yeah. I'll give you an example. Okay, Laura Koonsberg, the BBC's political correspondent, had a big interview on Sunday with Boris Johnson and accidentally this morning sent the journalist notes to Boris Johnson by mistake, which meant that he saw all the sort of stuff that they'd written about what they were going to say and try and lure him into saying.
Yeah.
And they've had to cancel the interview. But so it's pretty much a disaster. But she has come out on the front foot saying, I'm really sorry. It's all about red faces. I'm very embarrassed. It's just awful. But this was the best way to do it. And I think it's managed quite well, really. But that's not what's happened here. There could have been a bit of mea culpa, a bit of we could do this, we could do that. We've got big plans that we'll be all out next week. But nothing is worse than something.
Yeah, indeed. Anyway, looking forward, I think we will probably get some clarity on what that rollout process is going to be like.
Will we? Will we really?
Yeah.
What, next week? At the
Monday, they've got a big event on Monday.
Oh, on Monday. Yeah, sorry. I thought we were getting some at your conference. Hi.
Oh, no. Not my conference.
I'm only saying I've been waiting for clarity for a long time.
Clarity, Jane. Okay, good. Right, let's move on from that because it's quite exciting. This is the personal lines auto. Could be obsolete in 20 years.
Yeah, it sounds like a long way away, doesn't it? But so Morningstar is carrier management is carrier management, it's insurance P&C publication, and Morningstar is a investment publication and does all sorts of ratings and things like that. So really, they're saying in this article that because of technology changes in terms of self-drive vehicles, within 20 years, and they've got all sorts of different measures in here, which I won't kind of go into in too much detail today here, but they are saying that within 20 years, or possibly even less, personal auto insurance will have switched to manufacturer liability insurance, basically, because cars will pretty much drive themselves, and therefore it will be down to the manufacturer to be responsible. And they have there are various models about, very aggressive, moderate, which is the most reasonable one. And I think this 20-year one is most reasonable. So you have to have scrappage, obviously, if you're going to move wholesale or you're going to move from, traditional vehicles to vehicles that have these amazing software systems in them.
Yeah.
And that takes time. But this is basically saying that about 60% of the cars on the road at this point in time, this notional point in time, will not require personal auto insurance, which means that that market will be pretty much dead. So various players that they point at, Travelers, Allstate, and a company called Progressive, which is a US company, they say need to have some value in their business written down because of this. That's essentially what they're saying. And they're saying that Travelers and Allstate, maybe not too bad because they've got other insurance products, but Progressive, I think, is about 95% auto and very big.
Yeah. So
I'm sure Progressive isn't very happy about it. But it is interesting, and it's saying that at the moment we're on a kind of what they call 2 to 3 in terms of the technology. So we've got some of the Tesla systems, I think it's called NOS or something. So they are NOA systems, sorry. So they allow you to brake, steer, accelerate, stop, luckily, overtake, and change lanes. And that's on really complex urban roads. So they can do quite a lot already. And there are quite a lot of these cars that can do it on the open roads now. There are some vehicles that can be self-drive, but they're only in pockets, and they're these sort of taxi things in San Francisco and a few places like that completely self-drive. But that is going to change. So they're going to move to much more kind of self-driving. So that's, if they're right, it is a very significant shift. I don't think just for insurance. I think it's a significant shift for transport. Basically, we'll all be in these effectively self-driving vehicles.
Yeah. Have you ever been in a self-driving taxi, Ben?
No, I haven't. I usually have a taxi driver who bores me with
stats, whatever.
Well, right-wing comments or whatever. Yeah.
Vaguely racist stuff.
That
sort of
thing. Yeah.
Anyway, don't want to tar all the taxi drivers with the same brush, but
no, most of them. That's all.
Yeah, most. So, I always think this is really interesting as well because, firstly, I think that the technology, as you've just been saying, is kind of already there, and what you were saying about them being able to drive on the roads right now without having to do anything, having to rebuild roads that especially for this new type of vehicle, is I think means that 20-year horizon is perfectly kind of doable, because there isn't. It's not like building a railway, where you have to,
no,
spend billions and billions putting a new track in.
No, the shift is from currently at 2 to 3 in terms of the software. So if your car goes into a spin or comes, whatever, something happens on the road, you have to, the driver has to take over, has to be in charge.
Right.
But this new software means that the driver will not take over. The software will manage the whole thing, which is sort of scary. But that's the big difference. And then at that point, you do not need personal insurance in a car, because that is entirely going to be. It's like getting on a train, right? You don't have to. I know there's drivers, but let's say the Docklands Light Railway. You get on the Docklands Light Railway. There are no drivers. That must be a manufacturer's liability thing. I don't have any, say in that. So that's kind of what we're talking about. Yeah.
Yeah. Fascinating stuff, and kind of, let's move things on.
Well, I think if it happens in auto, I suppose it happens in other areas, doesn't it, as well? That's the other thought, is that I wonder what other things become completely automated that are just, that have a liability and an insurance policy attached to them.
Yeah, so for those kind of driverless vehicles, kind of the biggest quick win is in agriculture, because no longer, you have a bunch of robots that's basically looking after a field of whatever it is, grapes, cabbages, and the machines kind of will do everything. They'll prune them, and yes, that's really interesting. So
yeah, absolutely, yeah,
very good. So, anyway,
insurance.
It does, and I was just going to bring this up, which is from one of my favorite newsletters, Superhuman, which is all about kind of AI. And this is news actually came out today, which is looking at the latest round of funding for OpenAI, which has hit 6.6 billion so in the latest VC deal, and that's the biggest ever. So why does it matter? Because it values the company a massive amount. And then where they're going to spend it, well, they are spending it in investing in the next generation of ChatGPT. So the reason I brought this up is because it kind of leads into our next story, which is around kind of why insurers are getting it wrong, just to kind of give the context, because I do feel like sometimes people think, I know it's a lot. There is a lot of hype and a lot of froth around this stuff, but I use ChatGPT, I use the search engines, use various different things, and it is coming on at such a pace. You think, I remember when I first did a summary of I put some data in and asked it to summarize it, and it was pretty rough and ready, but now it's very, it's very good.
So the article. So I'm quite good at pronunciation, but I'm not very good. I'm not sure I'm going to get this guy's name right in case he's listening. Leandro Dalle Mole. He might be Italian. Leandro.
Yeah.
Anyway, I've butchered that probably. I'm sorry, Leandro. But he has written a very interesting article. He said he's talked to 100 and odd companies, insurers, about how they're using AI, and he's got a very good perspective on what's going on. I don't think he comes out with anything that we haven't talked about before, but he's saying fundamentally, people see, of course, these large language models as fundamentally important tools that could transform business. But he makes the same argument that we've made before and many others have made. We've nicked it basically and then talked about it on the show. But I'm not saying we invented it. But the argument is essentially that it takes a long time for technology to embed. The iPhone argument was in the first 5 years it sold, or 4 years it sold 5 million, and then it kind of went off the scale as it got built into the workflow of all sorts of things and people's personal lives. And he makes the same point. He said, well, the ChatGPT rise to 100 million users was really quite striking, but there was a lot of novelty factor in that, because it was new and you could just use it and it didn't cost you anything very much. But a lot of people have gone away now and said, well, that was kind of useful to an extent, but I don't really know what I'd use it for again. So a lot of people haven't repeat used it, I think.
Yeah.
And the quote I picked out was what proper integration of LLM systems requires customization, ongoing development, and human oversight. I think that's the phrase. So he is saying that really, and that human oversight, that oversight and sort of ongoing stuff is very important, and particularly in financial services, because the risks are great for this thing to go wrong, because it's people's lives. And so therefore, he says it could take a lot longer than we think for this type of technology to be built into, the largest companies in the world or the largest organizations in the world, because they are inherently difficult places to introduce all of this sort of stuff. But he's not saying it's not going to happen. He's just saying it's challenging, and therefore we should see it as challenging and not as a ready-made product that you could just drop in and do something with it.
Yeah.
So that's kind of interesting.
And I think that is interesting, because we have an AI session at the conference next week in Clay. And that's actually one of the points that the speaker is going to stress, that this is not, it's a bit like, innovation within companies. It's not something you do on a Friday afternoon, for an hour and you drive innovation. It's something that needs to happen all the time. You have somebody in charge of it who's driving it forward, that understands it. And that oversight piece is critical. And we're starting to see job titles now where you have kind of, head of AI governance or ethics or whatever it is, because organizations want to use this technology because it should help them to deliver their customer propositions more effectively and efficiently. But, you need to have those safeguards around it as well. So, I think it's a good article, that. And
and I think that everybody's talking about it. Everybody says this. We've just done some research, which won't talk about today, but later on. The reskilling, a lot of the sense is it's going to be around the ability of new talent or differently trained talent in claims in particular, to use AI and to be able to know how to use it. And I think some of the research that we've done says, well, that's not in place yet. So, de facto, that means it is going to be challenging, because if people aren't ready and trained to use it, then big insurers with regulatory liability and all that sort of stuff and financial liabilities are not going to just jump in and go, right, we'll let old Jeremy have a go at it at the weekend. That's not going to happen. So it will be interesting to have that discussion with the IT people, who sometimes get a bit, excitable.
Yeah, indeed, they do. Right, let's move on. So a couple of weeks ago in the news, we had an interview with Richard Brindle from Fidelis Partnership, and we thought it was a good interview. And then this week, I heard Mark Gagan on the Voice of Insurance interviewing Richard Brindle and Richard Coulson, and it was a really good interview. So I'd encourage everybody to look it up. Voice of Insurance, just search it up and have a listen to this. It's, I think, 35-40 minutes. And we
get it ad free, can't you, Jeremy?
I think you can, if you pay. But I recommend you at least listen to the first 9 minutes.
Do you think so? Okay, fine. Yeah, okay.
There we are. But
might be a conflict of interest here, I fear.
No, it's not. Okay, for complete transparency, I've advertised on it, but that's not the reason we're playing this clip.
No, it's fine. Richard Brindle doesn't mention it.
It is a very good interview. So we've clipped out a piece where, well, actually, let's listen to it and then we'll come back and have a chat. So here we go.
Is a little bit different to a lot of people in the market in that we are price makers, we are thought leaders, we are go-to markets for people who need something a bit different, and we use that to get bespoke deals which are perhaps better than the market. But certainly for our book, I think I'm very happy with our cat book, and I think our partners at the IGR, we are fully embracing the cold reality of climate change and underwriting accordingly. We have cat bonds that kick in for really big losses, and we're largely not exposed to the sort of attrition that we're seeing at the moment with all these SCS losses. And we've missed a whole slew of losses this year because of our underwriting approach.
Your message is presumably we're not going to jump back down into that pit because it's not going away. This frequency is still there.
Well, who was it saying the other day $150 billion of cat losses is the new norm?
That was for risk.
Yeah.
So yes, within my world, that's publicly available information. I'm sure Jeff Masters can say it's worse than that. So that gives us a rough idea. I
think Jeff would be happy with $150 billion, but let's not forget, we still have people, and it does go to some of these ill-starred attempted capital raises. We hear anecdotes about people trying to raise money based on unadjusted RMS and AIR with just nothing to say about what's happening to our climate. And no wonder the investment community are sitting on their hands, because this stuff is literally incredible to them. They're like, well, that doesn't make any sense. And I think that explains, and we're very close to the bankers and the investment community, that explains why people are not writing checks.
Yeah.
It's just not plausible.
That versus number is up 15%.
Well, there's still a mentality, and I talk about it all the time, particularly when you get to this time of the year. It's a sort of Monte Carlo thing. When people start talking about a clean year, I mean, we've already had over 100 billion already. There's still that old school attitude that we're going to have a quote unquote clean year. There are no clean years. It doesn't happen with climate change anymore. We used to have them. I remember we started Lancashire in 2006. There were no cat losses, I think 0. And we made an extraordinary return. But those days are long gone, and you have to underwrite accordingly.
Sometimes after a couple of clean years, reinsurers often talk about relevance and wanting to stay relevant. And people don't seem to want to pay what it's actually going to cost to insure and reinsure these losses that are getting worse year on year. How do you stay relevant at the same time as knowing that you have to charge a certain price, and knowing that a lot of people still haven't worked out that this is the new price, or they don't necessarily agree with you? Or they've got a muscle memory of getting things cheaper after a couple of clean years or a couple of very profitable years.
Well, yeah, I would politely reject the premise of a clean year. They don't exist. The relevance point, I think, is very fair. And I think there's a lot of people...
It's still relevant because it's still here for the massive ones that are going to happen.
I think there's a lot of people jostling to provide the same old products and not offering anything different. I think service is key. As I said, we've just literally had some clients in Canada, needing urgent backup protection. I'm very critical of our market, where particularly at times of year coinciding with school holidays, that people can't even get hold of markets. I think I've said in other interviews recently, one thing you can say about me, one thing you can say about us is we've always got a price. You may not always like it, but we've got a price, and we've got meaningful capacity, and we're in the office. And I mean physically in the office, by the way. So I think that's a large part of the answer to your question, Mark, is you've got to provide the service. Do clients always like our price on our product? No, they don't. But people need contract certainty, and they need balance sheet protection. Now, we are open to other products, for example, structured products, which I think are of increased relevance now. And that's something that, we are discussing with a lot of clients here this week. We would even look at certain aggregate products if they attached at the right point. I think the problem is we've all seen some publicity around Allstate recently and the ag product there. We weren't closely involved in those discussions. There is probably an ag product we could craft at a level, not at the level they were seeking to buy. But again, we're open to different things.
So it's good interview, that little slice of it. And we picked up on that bit because of the quotes about service and being in the office and having customer or client really at the heart of what you're trying to do. It was a good clip.
Well, yeah, I think it's a really good articulation of what the market is supposed to do. I mean, Richard Brindle is never knowingly understated, and that's fine. I mean, that's good. I mean, in this instance, I think I couldn't disagree with him. I think we see in our research that there is always problems with availability of underwriters, and yet the London market, which we focus on, is supposed to be there ready and innovating with these new risks. And that's what I think Brindle is saying here quite rightly is that if you're not present to have the discussion, to have the conversation, to offer the price, then nothing happens. And he's really on the money, I think, about that's what Lloyd's to some extent has lost a little bit. It's become, not as much of a lead market. It's lost a lot of reinsurance. It's lost, and that's got to come back. And I know that he, hasn't had much time for all these algorithmic underwriting follow businesses either. But it's good to hear, right? I think you do need the judgment, and you need to, at some point, technology needs to kick in, the costs need to reduce, and we need to get underwriters really thinking about what products and risks they could cover. Otherwise, you're going to walk into irrelevance, as David Howden says. You're not going to be relevant. Other people will put it in. And then just the final point, I think, is the lack of sort of precision or probity, if you like, around the evidencing of climate change and building that into the modelling and the pricing. And that has been evident for quite some time. I mean, the losses have been huge. The cat modelling or the cat models do not seem to take account of what's going on. We talked about it a few weeks ago. They've missed all these secondary perils, So, yeah, 150 billion isn't an unusual year for losses now, and yet you can even have that without a major windstorm or earthquake. Not having you don't have to have a Katrina anymore. You just have lots of wildfires and lots of things like that. But they're all, as Brindle said, they are, and this is where insurance should lead out, I think, with thought leadership, because he's not just saying, here's me trying to make money in insurance. He's saying, I'm trying to get a product that works for the world we're in, not from a product that's from a world that was 20 years ago.
Yeah.
When there were no cats often.
Yeah. No, it's really interesting to hear that perspective. And well, as I said, I think you're absolutely right. Service clients got to be at the center, otherwise what it's all about. And I'm sure that that's what we're going to be talking about next week, because
it's like service. When Brindle talks about it, and certainly I think when I talk about it, I don't talk about service like a fluffy thing.
No,
it's really, really important to have it, because I want the product now. We all know that in our normal lives. You go, it's frustrating, it's annoying. But some of this is sort of business critical, and it's about the world going on. If insurance cannot provide the service and isn't there to pick up the phone or get on the plane to have the discussion, then there's going to be no product. There's going to be nothing. There's not even a price. There's not even a way of covering or transferring that risk.
Yeah.
Problematic. Yeah.
Good. Thank you, Mark and Richard, for that clip. All right, let's move on to the final instalment of the John Muir interview. So John Muir, for those who don't know, has been a stalwart of the London market, been around for 49, let's just round it up, 50 years. And we interviewed John and we just really asked him to reflect on his time there. And this is the final episode, final installment. So let's run the VT, as they say, and then we'll come back. So John, thanks ever so much for spending time with us and sharing your thoughts and reflections on a long career in the London market. I was just going to finish by asking, if somebody's new coming into the industry, have you got any words of wisdom, any advice that you would give them?
Oh yeah, I speak a lot to young people. I mentor 7 people at Willis, and I'm a big fan of young people. I guess I've got 4 kids, I've now got 4 grandchildren. Young people are the future. We need to invest in them. So you young people, pay attention to this. Come to the office. Don't hide at home in your parents' bedrooms or in your bedsits in central London or wherever. You will learn so much more from listening to old farts like John Muir and hanging around experienced people who understand this business, hearing the anecdotes, enjoying the stories, listening to the successes and the failures. You need to immerse yourself. This is a career. if someone ever, and I say this to people at Willis who I deal with, I say to the young ones, I say, do I sound like somebody who's bored with my career? And they go, no. I say, well, think about it. I've been doing this for 49 years and I still love it. And that's because it's constantly changing and evolving. It's constantly challenging. The best part of the whole thing, people sit there thinking that because I've spent the last 34 years at Willis, that it's all about Willis. It's not. It's all about the people at Willis, and also the people in the market who I've been fortunate enough to deal with. So I've had a very wide sort of society doing what I do. But it doesn't matter, even if you're in a relative silo or specialty, I like to call them specialties. Remember, immerse yourself in the specialty. Go and join the Lloyd's Under 30 Society, hang out with people, go to the pub at night, talk to people, dedicate your career, and then at the weekends, we've got a great work-life balance, I think, in insurance. You know, at the weekends, unless you're away abroad working, typically you've got that off from Friday night to hang out with your family and your friends and enjoy all of that. So that would be my advice.
Yeah, and I think, John, just to say from my perspective, we met many years ago. I think we stood up at one of Jeremy's conferences first off, didn't we? And then we've spoken at many conferences since then. And you know, for me personally, you're one of those people I always look forward to seeing at a conference or being on a stage with, because I kind of know that there's going to be that fun element to it. And, you know, for me, you kind of epitomise the best of the market, genuinely do, because, you know, there's always going to be something to laugh about. There's always going to be something which is a great piece of gossip. There's always going to be that sense of coming away from a conversation with you. And there are other people like you as well, many other people, I think, just for the young people out there, and there'll be many more to come, who just make this, of all the markets I've worked in, I think just one of the best. I think it is just brilliant fun. And I think you can go outside London as well and find the same sort of thing happening, you know, if you go to New York and meet people there. There's a sort of sense of, I suppose, that irony. We all work in insurance, but guess what? Hey, we found something that was really fun. Yeah. You know, even though it shouldn't be. But I do feel, like you, I feel very fortunate. I don't think there's anywhere quite like London on the planet. London is really the epicenter of complex insurance. And that makes it so unique. To have 60,000 people who are doing complex insurance all in a square mile is so. I've got a thought for you, Ben, whilst I'm here. Do you want to hear my thoughts about Grace Church? Yeah, go on. So you know, John Muir is a huge fan of Grace Church and your surveys. I'm actually, just generally speaking, I'm a big fan of surveys. I just think that's a good idea, because people get to express their opinion. And you're very good at publishing what people say. Yeah. So it's a good open track. I sometimes wonder whether or not there should be some cleverer surveying of people in the London market about, you know, what is it that we should be doing? Because I think you would get, in terms of market modernisation, you know, what do people want to go and do? Because I think you'd get some quite differing feedback, but I think it would be really illuminating for the associations to see what's going on. Brilliant. So well done, Tintech, Jeremy. Yes. Ben, well done, guys. You provide a wonderful, I think, platform for this type of thing, so where people can feel comfortable and you can put out messages which people find interesting. So keep going. We will for a little bit longer. We'd like to be on the beach too.
John, thanks ever so much for spending time with us, and we wish you all the best in your retirement.
Thank you very much.
Thanks, John.
Bye.
So, really good last instalment there from John. Very enthusiastic, as he always is, and brilliant points, really, about, going to the office, immersing yourself, I think he said, in the career, and you'll get a lot out of it.
Yeah, it's a bit like, Brindle and Muir. That must be about 100 years of insurance expertise there we've just covered. But they're saying the same sort of thing, really, is that actually business, and you go back to Adam Smith in this, really, is business is about people. This business is about people having conversations and working out between themselves what's going to work. So when you're as experienced as John Muir, when you're as experienced as Brindle, and when you're, quite frankly, as experienced as you and I are, Jeremy,
Yes.
we can pass that experience on because we've got it. If you're 24, you haven't got that. You've got youthful vigor and energy, but you haven't got that. So John's right. John's point is about learning, getting your mentors, if that's what you call them. But just as he said, listening to old farts like him in the office is extremely valuable. I think the other really good point he makes is about insurance, because we talk about insurance a lot and why you should work for it, because we've got a purpose and all that stuff. Yeah. But he said, ask anyone, do I look bored? Am I bored? I've never been bored. I've loved the job. It changes all the time. It evolves. And that's
fun.
what good jobs should be, really, I think.
Definitely. So thank you ever so much, John, for the interview. We're going to put the whole series up somewhere, and we'll share that link. So if you want to go back and watch any of them, you'll be able to.
Yeah, we'll put it up on Insurindex, I think. So that'll be in the next week or so. And we'll do some sound bites and some quotes and things, because really, I know that it's hard for people to listen to maybe, what is it, nearly an hour these days, because people have the attention span of a gnat. I'm sure that John would agree with that. No, I think it is difficult to set aside an hour for them, but there are such kind of good moments throughout all of this that John, and points that John makes, both about his early career and the events that shaped how he's worked in insurance, what he's learned, which is really important too. You don't see the events if you're sitting at home, as he said, in your bedsit. So we'll try and get a few of those out because they're fun, but he's making a serious point as well at the same time.
Yeah, good. Right, let's wrap things up. Ben, what are you doing this weekend? Anything good?
Big kids coming. The adults, they're kids, but they're adults. So we'll do cook some food, go out for walks, stuff like that. Autumn, isn't it now?
It is autumn. Yeah, I took delivery of the logs last weekend and stacked them all up. Yeah,
I did start up one of my log wood burning stoves this week as well.
In the west wing, was it, or the east wing?
Well, I've got 3 wood burning stoves in this house.
Wow.
Yeah.
There you go.
I wouldn't call it the west wing.
What am I doing? I am going to. Some friends are coming around. Well, I've actually got a friend.
Yeah,
that's quite nice.
It's lovely you got a friend.
Got a friend and take her out for lunch. So yeah.
Oh, that's nice. Very nice.
Very good.
Yeah. And then we've got London Claims next week.
Oh yes, London Market Claims on Tuesday. So and we'll report back on that next week. I think we're going to try and do a few Vox Pops, aren't we? And
a few Vox Pops. Anyone wants to do a Vox Pop?
Yeah.
Get in now. Drop me a line. I'm doing them.
Yeah. Great. Well, thanks for that, Ben. Right. Enjoy the weekend, everybody. And we'll see you next week. Goodbye.
Cheers. Have a good weekend.